GST, you see you will be charging both CGST and SGST. So on the same transaction or for the same assessee who was until now covered under one department will now be covered under both the state department as well as the central department. So you will have dual proceedings as far as a provider of service is concerned, who will be a supplier of service under the GST regime, will now have to deal with two departments. And you can well understand, I have the fortune of being the empaneled faculty with the department. So a lot of times when we have, I hope no one from the department here.
No, not at all.
Once what happened, I was at a seminar in Siliguri, and it was the year when they had bought this provision of taxing hospitals with air conditions, you know, and later on they withdrew that provision. And I wasn't aware that there was someone from the department who was not even in the audience. He was very much on the dais with me. So then I claimed that bhai ye jo AC hai, today air condition is not a luxury as far as healthcare is concerned. That's a basic facility you can offer. I don't know whether he took cognizance of the fact or not, but I'm very sure that he got a little offended. And hence I always make myself clear that whatever I'm speaking in my professional capacity, personal capacity, and our secretary on the dais has confirmed that there is no one from the department here. Now you see, so when I had the chance of going and educating them on service tax, so I had this one topic once which was how to understand an auditor's report from viewpoint of service tax audit. Now I am not an IT person at all, I don't even file my own IT returns. So I did a little bit of study before going. You see, when you have to address an August gathering, you rather be prepared. So I read a bit, I asked my partner as to the audit report and this and that. But you know, actually when I went, I had to start with what comes in as debit and what goes out as credit. And I had to revisit my bookkeeping days, which I had learnt in class 9 as a student. So you see, the resource, the human resource within our country as far as the eastern part of the country is concerned, I'm not too sure about the rest of the country. There is so much of knowledge that's lacking and there is so much that needs to be done. So now for a common man, you see, who's having to deal with multiple departments, that will be a bit of a challenge. So whether you'll be having 2 assessments, whether you will be having 2 scrutinies, whether you will be having 2 appeals, that's again something, that's a test of time. But that will be one of the hindrances as far as the dual levy is concerned. And again, when we talk about supply, then I'll also let you know about the drafting errors that were there. Anyway, this is, as we were discussing GST, why GST versus what we have received. When we talk about multiple taxes and taxable event, I think that we've discussed in great details. Cascading effect of taxes, yes. Again, you see, send back credit. We have a slide on this, so I think we can take it up. But let me just give you a thing. Send back credit as far as service tax and excise is concerned is primarily guided by the send back credit rules 2004. And there are some restrictions today. Say for instance, if I engage a contractor to develop a property and tomorrow if I rent out that property, so will I be allowed to, and obviously there is an output service tax incidence on the renting part, yes or no?
Yes.
And I have paid some service tax to the contractor who's developed the property for me, yes or no?
Yes.
Will I be allowed to claim a set-off in the present regime of the service tax I pay to the contractor against my output service tax of renting? Yes or no? Are all of us on the same page? Have you got the query? So today the send back credit rules do not allow you to take the set-off of an input service of say construction service or works contract against the output service of renting of immovable property, right? So we were very hopeful that once GST is in place, credit being a substantive right, you should allow it. You know, in income tax, as I have already mentioned, I'm not no great brain as far as IT is concerned, but I have been given to understand as far as it's in relation to business, that's allowed as a business expenditure. Yes?
Yes.
But in send back credit rules, and also when you see the send back credit section under the GST law, you know, they say that any service which is used for the personal consumption of the employee will not be allowed. So it may be a scenario where I have given a club facility to my employee, ultimately कि भाई during office hours or after office hours, maybe there is this big concept of like eco space. They've got so many facilities within the office compound, right? So I get a membership of 500 rupees per month for my employees, that you go and you work out, so that at the end of the day you with a fresh mind can deliver more as an employee, right? So you think that will be allowed, the service tax portion today or the GST portion post GST, will that be allowed to be claimed as a set off? Yes or no? No, I have asked you 2 questions, so you have to have 2 answers. The first question is, today will you be allowed that, yes or no? Answer is no, because if it's for the personal use or consumption of an employee, that will not be allowed. So this same restriction is also being carried forward under the GST regime, wherein they say that anything which is in the personal use or consumption of the employee will not be allowed. So that is a bit of a hindrance as far as credit is concerned. Obviously, they also have other restrictions insofar works contract service is concerned, or motor vehicles, etc. concerned. That again you can go in great details when you read the model law. So yes, to some extent there will be a cascading effect of taxes, and also alcohol, petroleum, tobacco, all of these will be kept outside GST. So again, to some extent the cascading will be there. Evolving law consistency, service tax is a law of 94, right? And excise is a excise is a law of 1944, and we are still deliberating upon the issue as to what is manufacturing, right? Have you come across case laws wherein the Supreme Court or the High Court is discussing what is manufacturing, if it's marketable and this and that, etc. So you see that there is so much changes that it's difficult to basically understand the law in entirety. So now with GST in place, we are hopeful that a lot of things will now be ironed out. To a large extent they will be. But also you see the taxable event, which is the crux of GST, supply. So then again, when you go through the model law, you see that there are so many drafting errors as far as the definition of supply is concerned. So to that extent, yes, evolving law, but there will be glitches again here and there. Compliance, we've already discussed the example of 370 returns. So each time you flash a visiting card with 10 branch offices, make sure that with GST you curtail it to 1 or 2 offices only. Otherwise, next when you give that card to a department officer, he'll go online and he'll see, bhai, aap saal ka 370 returns file kar rahe ho ki nahi kar rahe ho. So that is one constitutional limitation of centers and states. Now states will get a chunk of the services and central government will get a chunk of goods. So that's as far as the limitations are concerned. Multiple registration. Now, as I said, no concept of centralized registration, but yes, there is one concept that even in the same state, for one assessee who's got different businesses may opt for vertical wise registration. So I may have a paint factory, I may be a job worker, and I may also have a garment factory. With a single, under a single company, I can also opt for vertical wise registration within the same state. That's an option that's given. This is basically how the GST law would be working. Very simple to understand, not much about how GST is charged and this and that. All of you have a printout of the slides, so not taking much time on this one. Cross utilization we have discussed already. IGST, yes. Now integrated goods and service tax is basically a tax on? Is a tax on? Interstate? Supply. So we still have some people saying interstate sale. So it's interstate supply. So basically, let me ask you, as a supplier of service, when I raise a bill to you and you are within Bengal, on a bill of 100, I am charging you 10 rupees CGST and 10 rupees SGST. So you have in your kitty 10 rupees each as your input credit subject to the SENVAT credit. Now suppose you are adding value and then you are supplying the same services to someone in Bangalore, right? So when you supply the services, your bill value becomes 200 and you charge IGST of rupees 20% on 200, which is 40. So when you pay to the government exchequer, you will be paying 40 minus 10 on account of CGST and minus 10 on account of SGST. And assuming you don't have any other credits. Now this supplier in Bangalore further supplies the goods to a person within Bangalore. So your client will now be charging again CGST and SGST. Say his bill value is 300. So he'll be charging 10% on 300 each. That is 30 and 30. So, and what does he have in his kitty as a credit?
20 and 20.
IGST of rupees. So he will first set off IGST against no. So the cross utilization is basically no cross utilization between SGST and CGST, but IGST first against IGST, then against CGST, if anything is left against SGST in that order of hierarchy. Quickly then, cross utilization done, GST network, not discussing much. Imports, proposed features, returns. Okay, now this we have, I think we missed out a slide on registration. Yeah. So basically there is a threshold limit of 9 lakhs. Now I personally feel when 80% of the tax is collected from 20% of the people, there's no point why the government wants to increase its admin cost in terms of administering so many assessees across board. Nonetheless, as of now the threshold limit is at rupees 9 lakh and rupees 4 lakh for the northeastern states. And also when you really compute this, and also there are some people who will, irrespective of their turnover, need to mandatorily get registered with GST. That would include people like an input service distributor, that would include any supplier of service or goods who's engaged in interstate supply, even if it's rupees 1 lakh he has to. Also assessee who's liable under reverse charge mechanism, which is even today the state. As I said, every registration state-wise, and you will have to take registration within 30 days of the date on which the liability arises. Vertical-wise we have discussed, and no concept of centralized registration, and unified application to be made to both the tax authorities. Now returns, as we have discussed, common return to serve both the purposes. Now returns, this is very interesting. So we'll file 3 returns in a year. So when I charge rupees 10 and 10 respectively on a bill of rupees 100, so I upload those details in my GSTR 1, which needs to be filed I think by the 10th of the following month. Now when you file your GSTR 2, which I assume is 15th or so of the following month, the details from my GSTR 1 get auto-populated in your return. So there you see that Shivani had charged me 20 rupees, but in the return it's showing only as rupees 10. So you call me up, you reconcile the data, and then you file your GSTR 3. In an eventuality where you say it's 20 and I say it's 18, sorry, nothing done, you'll have to lose the rupees 2 credit until and unless you reconcile it with me. So that is the concept of 3 returns. A lot of people think 3 returns means 1 SGST, 1 CGST and 1 IGST. That's not the scenario. So it's 1 for outward supplies, 2 for inward supplies, 3 for the reconciliation. So for a normal assessee, it is filing 3 returns in a month plus 1 annual return, which needs to be filed by the 31st of December of the following financial year. And then you have different type of returns, one for the ISD, that is an input service distributor, one for a dealer who's opting for composition scheme. Again, we don't have a dedicated slide on the composition scheme, but there is a limit of 50 lakh within which you can opt for the composition scheme, and that again in my view is a very low limit, should be close to not less than 2 crore at least. And then again there are few restrictions which have been given. We have also proposed through various chambers that the restrictions which are there in the scheme should be lifted, because you see by and large the idea is to make everyone tax compliant, but with 37 returns in a year you can might well understand what a small assessee would be feeling as a burden. So we have said that at least this limit should be raised to 2 crores. Now again we come to the payment. That is not something that needs much of a thing. Broad framework about the model law, which looks somewhat like this if you really have it printed in the same format as which it is come in. So a lot of work that gets into reading this, 25 chapters, 162 clauses, a lot of schedules and rules. Levy and collection, again interstate, and I think we've discussed reverse charge. Like you have a reverse charge on services, You would also be having a reverse charge on goods, and what services and goods will attract reverse charge will again be determined by the GST Council. Supply. Now, supply is basically the taxable event as we discussed. It includes all forms of supply. Now you see the definition has been given under section 2, under clause 2, subclause 92, wherein they then guide you to the clause 3, which has an exhaustive definition of the term supply. And as I just mentioned, you see we are still fretting upon the fact as to what is manufacture. Thankfully, they never defined the term service, but when they did, again there was a spate of litigation. Again, the term service has been defined within the Finance Act under section 65B clause 44, wherein they say A, it has to be rendered by one person to the other. It should be it includes a declared service, and it has to have an element of consideration, and there has to be an activity. So it was this very forum when we were deliberating upon service tax, when the law had just come in 2012, the changed law. So what all tenets have to be satisfied for any activity to be a service within section 65B clause 44 of the Finance Act? One, has to be rendered by one person to the other, has to be an activity for consideration, and includes the declared list entry. So we often used to say, there was a joke, so happens that till and unless you have these small moments wherein you can make an audience laugh, you can't really get the thing. And anyway, my husband keeps telling me that my sense of humor is really pathetic. So anyway, coming back to this, so इन्होंने क्या बोला? There has to be an activity for consideration by one person to the other. So how many of you sitting here, I'm talking to the male counterparts only, give a monthly or a stipend, or for the lack of a better word, as I said, stipend to your wives every month to run the household expenditure? How many of you do that? I don't believe just two of this entire lot. How many of us are here in the hall? Close to?
Close to within 10 only.
नहीं आपने कितने जाने 200 हैं. So only 2 out of 200, huh? I don't believe this. I am working, I still claim money from my husband. The concept is all my money is my money and all your money is also my money. So that is how we as ladies function. So you see, when you give a monthly to your wife, the idea is what? When you get back to your office house at the end of the day, she gives you a good meal. If your child is troubling you, she takes care of the child. And if there are any issues, etc., she keeps them at bay and she does not really trouble you. So you see, there is an activity. Yes or no? What is the activity? That you are being served food. And if you do not pay the monthly by the 5th or latest by the 7th of the following month, तब तो खाना मिलना ही नहीं है. Right? And also there is a consideration which is monthly. And obviously there is by one person to the other, one is you and the other one is your wife. So even this is a service. So on that note, your wife should be charging you service tax. That's a separate thing. How many of you pay 10 lakh in white is a separate thing. But when the day comes when you start accounting for it, then you can well understand that even this would come within the ambit of service.
But these are the reimbursement of expenditure.
See, so a wife claims that these are reimbursement of expenditure. But again, when you talk about reimbursement, when you buy vegetables from the vegetable vendor, is he giving you an invoice? No. So there gone the reimbursement. That means service tax to lagna hai. Anyway, that was on a lighter note. What I'm trying to say is, where was I?
But that is
Supply.
furtherance of business now.
No. Mind you, furtherance of business is under the GST regime. Right now I'm talking about the definition of service under the Finance Act under section 65B, subsection 44, wherein there is no mention whatsoever of furtherance of business. Right? So supply includes all this, and you see the definition is so loosely drafted that again when you see the very section starts with the term includes, such as. So when you have such terms which are used within the definition, you can well understand that's opening up Pandora's box of litigation. So how much will it stand the test of time is another very big question, but yes, the definition is loosely drafted, which the government needs to look into. And also they have seen, in fact, where they mention about taxable event, manufacturing will have no relevance, blah blah blah. Anyway, now we come to the next one, which is the tax.
This case where a supply is there, now business consideration, even that may be a supply.
Yes, now you see the definition is very broad, very rightly pointed out. There is a schedule which has been given to the said clause wherein they say that these specific scenarios wherein there may not be a consideration will also fit within the ambit of supply, like stock transfers. Even when it's happening by the office of one assessee to its very own office, within the definition which is currently given, stock transfers will fall within the ambit of supply. So again, it's a huge definition. You have various schedules wherein, as rightly pointed out, that even few instances where there is no consideration, it will fall within the ambit of supply. Now very quickly then, because I've already passed my time. Okay, now you see one very important thing I would like to mention is about the time and place of supply. You see, we have been discussing that supply is the taxable event. But you believe me that it's not supply alone which will determine when GST is payable. So they have defined what is the time of supply, and they have also defined they've defined what is the time of supply of goods, and then they have also defined what will be the time of supply of services. And then they have given a few points. Earliest of the following will be determined as the time. So basically, though we know that supply will trigger GST or the liability to GST, it's only the time of supply which will determine at what point in time is GST payable. So supply is the taxable event, and the provision for levy of GST or the time of collection, basically so to say, will be the time of supply. So supply decides what tax is imposed, and the time of supply decides when it is imposed. Very important. Then you have for continuous supply of services, the time of supply has been defined. For reverse charge, the time has been defined. So on and so forth, they have defined as to what will be the time of supply and of services. Now, valuation, very quickly then, now there will be no concept of MRP valuation. This they have basically taken from the excise, wherein they talk about the transaction value, and then they have also mentioned that, sorry, see taxable, which is the slide please. A person, again as I said, that you will have the threshold limits below which you may choose not to charge and pay GST, but those threshold limits will not apply, and once you to certain specific class of people, and once you cross the taxable threshold limit, then you will have to necessarily get registered within GST. Now also a bit of a hindrance here when you talk about the 9 lakh limit of calculation. It's not just your taxable supplies, even exempt supplies will be included to determine whether that limit is crossing 9 lakh or not. So there may be a scenario where your exempt is 8 lakh and your taxable is just 1 lakh, but when you calculate your 9 lakh, it will include both. So only your inward supplies will not be calculated in that, and reverse charge supplies will not be calculated, barring which you'll have to calculate, which again is peanuts. 10 lakh of supply, even if you work on a margin of say 2%, 2% of 10 lakh is? 2% of 10 lakh is? My geography and maths, both are pathetic. 20,000 in a year. So that means if you really calculate on an annum basis, it's that amount of money we are talking about. So virtually no one is left outside GST. And as I said that 20%, 80% of the taxes are being collected from 20% of the people, then why this huge compliance burden on so many assessees across board? Now very quickly then, valuation, yes, that's again a very huge topic that you can discuss on. Transaction value, which may be rejected by the assessing officer wherein the two parties are related. Now again they have talked about the inclusion and exclusion of discounts, etc. This very provision has been borrowed from the central excise, wherein this concept was bought in 2000, prior to which it was either the MRP valuation or the normal price. Input tax credit, yes, as we have already discussed, like today you have an embargo of 1 year beyond which you cannot claim credit. Likewise, under the GST regime also, you will not be able to claim credit beyond 1 year from the date of the invoice or the filing of the annual return, whichever is earlier. So in cases where you have filed the annual return but the 1 year time period has not elapsed, you will not be allowed to take the credit of those invoices. You get my point? So say for example, if we see 1/4/17 as the date of implementation of GST, there is some invoice on the month of January 18. Otherwise, you have a time frame of January 19 within which you can claim credit. But for the year 17-18, you need to file your returns by the 31st December. That means what? You will not be allowed to take the credit beyond 31st December, even though the 1 year time period has not elapsed. You get my point? So this 1 year is limited to the filing of the annual return. So on some clauses you see the time period is not even a 1 year. Matching concept, which we've already discussed about, obviously they have seen that this concept was tried and tested in countries like China and Brazil, but it failed miserably. But yet again, as we know, we live in a highly trust deficit society, so there will be a lot of bucking up as far as the assessees are concerned. One needs to be very, very careful about the vendor selection. You cannot have a scenario where you get a flying in vendor, you pay the GST and then you don't even realize as to where it is. So you talk about a big company which is dealing with thousands and thousands of vendors, you can well imagine that what kind of compliance burden comes on such an assessee. But again, when you talk about the credit, there are some restrictions, but one of the major reliefs that I could see was allowance of the credit of capital goods completely in the first year, unlike today where you have 50-50%. Again, some services as far as GT is concerned, the restrictions are not being carried forward, like up to the place of removal, etc. Transitional provisions, this is something that I really feel one should go in great details. This will really help you understand that how from today itself you can help your clients get prepared for GST. Like, you know, you really talk about a scenario wherein today you have a certain material on which you have paid excise duty, right? And you are a VAT dealer. So you're not allowed to take the credit of excise against VAT, so that elapses. In a way, it's a cost to you. But say for example, if you purchase certain goods and you had paid excise on that and you have not sold those goods until 31st March 2017, and assuming 1/4/17 is the date when we have GST, those very goods will now be subject to in a way excise by way of CGST. So we propose to the government by way of one of these associations that why don't you allow such credits. So what they have mentioned is, as far as central excise and service tax is concerned, that whatever return, input tax credit is reflecting in your return, that we will allow you. So there may be a scenario where maybe I left a bill by mistake and that bill value was worth rupees 50 lakh. On that, 15% of service tax is a huge burden. So what if I lose that bill, or what if I by oversight forget to add that bill? So what happens is basically I have not shown it in my return. So as per the current transition provisions under sections 143, 145, you will not be allowed to take that credit. So again, a bit of a hindrance. You should allow us that credit as far as that is a valid credit. So will I be allowed to revise my return in the GST regime pertaining to the current law? That's again a very big question. As I mentioned, certain goods on which I have paid excise duty today and is not an eligible credit. So obviously I'm not showing it in my books as a credit because that's not a credit. But suppose those goods remain unsold. After 1st of April 2017, I'll be paying CGST on that. So why are you not allowing me the credit of the ED that I'm paying today on those very goods? Likewise, when they did away with the concept of education cess and secondary and higher education cess, in 2015, both on service tax as well as excise duty, you see that the credit was allowed only against the respective cess, otherwise it wasn't allowed. Now when they were anyway coming towards GST, then they should have allowed us to carry forward that credit so that we could take that as a credit in GST. So these are a few issues that will get covered even under the transition provisions. With this, all the very best to all of you here and to myself for getting prepared for GST. I would like to thank you, Sonu, for having me here, and also EIRC, and thank you all for a patient listening. Thank you very much.
Thank you, Shivani, for the wonderful speech. I think all of us are motivated to do practice in GST because of 37 written for a single client into number of branches if they are having 10. So lots of opportunities are there. Please read that sincerely. I would call our next speaker for the day, Rajshri Dasgupta ji. Please come up on the dais and take your chair. Please, sir, take your chair. I would put in front of you Sri Rajshri Dasgupta ji. Presently, he is at KPMG. He has professional experience in predominantly dealing with service tax, VAT, CST, and customs matters and other local taxes. He has vast experience in advising clients, having all India footprints in indirect tax structuring and compliances. He has been handling litigations relating to sales tax, VAT, service tax, central excise, customs at various levels, from original adjudicating authority to the appellate authority. Prolific speaker at various forums on issues relating to indirect tax, including panel experts on indirect tax and GST in various news channels. For felicitating Dasgupta ji, I would request Madhulika, please come up on the dais and offer a rifle bouquet for welcoming our second speaker, Mr. Dasgupta. Friends, please give a big round of applause for welcoming Mr. R. Dasgupta. I would request Geeta, please come up on the dais and offer a memento to the P. Sivanisa.
Why will you go and collect?
Please give a big round of applause for motivating speech delivered by C. Sivanisa. In spite of her busy schedule, she came here and she accepted our offer. We are very much thankful to you, C. Sivanisa. So I would request Mr. R. Dasgupta ji, please come here and start your deliberation. Over to you, sir.
Yeah, you can use your. You need pen drive, then I am having.
No, pen drive you put what here? You have an HDMI.
HDMI got
Shall we start or? So good evening everyone, and thank you Yasi for giving me an opportunity to come down and speak on the goods and service tax. Now, being the second speaker and Shivani more or less covering the laws and the provisions and everything, so it gives me a much difficult task to actually say something which she has not actually covered. So, okay.
Also the cushion and precision with the audience.
So no issues. That I can always take it forward. Now, what I'll try to do is, though I have all the materials that she has covered, but at the cost of repetition, what I will do is I will just take you through what is GST and stuff in for 5 minutes, 5 to 10 minutes max, and then I will ideally take you through the issues under GST, and that's more important. Where there might be a place where whether an industry or people practicing or whoever who looks into GST, what are the possible places where things can really be an issue under GST. To that extent, whatever law is available as on date and in the public domain. Now, so how did I cover it? It's what the journey so far, what's changing, and GST impact on my business. So let's say if I run a business, how GST would impact me, and how GST impacts different sectors ideally. It might be a manufacturing, it might be trading, it might be logistics, it might be whatever. How it affects different sectors as on date, and how do I prepare myself for GST? That's very important. Now this we all know is really appreciable task by the government for getting it through so fast, getting the precedent sent, forming the GST council by a notification. Though that notification though the notification dated 16th of September has thrown a lot of hue and cry both in the legal forum as well as in the industry, that with that notification, actually do the government really have the power to actually tax either central excise or service tax or whatever tax with effect from 17th September? Because that notification forming the GST council, giving the powers to a constitution, actually takes away the power of the government to actually tax central excise, service tax or whatever taxes which is there as on date. In my personal view, yes, there is a little bit of an ambiguity, but the intent of the government is not that ideally. So they would come up with some clarification, but as on date it stands. Now tomorrow, if there is a litigation in place, so people might take a plea of this notification saying that you don't have a power to charge excise duty, where there is a issue on a classification and a payment of excise duty or service tax. So this can be one of the places for the legal people to in fact fight upon, saying that why this notification you don't have the constitutional power to charge me excise duty, leave aside the fact of valuation or chargeability, rate, etc. Now what's changing? Now as I said, at the cost of reputation, I just want to take you through certain basic important points. We all know. Now, what is the difference between the current regime and GST? Very, very in short. First, it changes the basic concept of chargeability. That today the levy is on sale. It ideally shifts the levy to supply. So once it shifts the levy to supply, then ideally all transactions between group companies within the same company ideally becomes taxable, which means stock transfer, transaction between principal and agent ideally becomes taxable. So all these deemed supply concept ideally comes under the GST. It changes the concept of levy of tax, of collection of tax. Today, the tax used to be collected and paid in the originating state. Wherever I has to pay the sale or provide service, I has to pay tax there. And now it shifts to a destination-based consumption tax. So if it is a destination-based consumption tax, now the tax would be ideally collected by the state where it is being consumed. Now ideally it does not have much of a real life problem for a manufacturing sector, because for him whatever things are moving either from one state to another in whatever form is a tangible thing that is moving. The test comes for a service sector. What is the state where you consume? Let's say I am in the logistics sector. My head office is in Calcutta. The order is being given by a company whose head office is in Bombay. I render service in Gujarat. What is the place of consumption? Here lies the catch. Let's say I have multiple places where I need to give the service. Right from Calcutta, I am one person rendering service to 4 or 5 different places, spreading over 4 or 5 different states. Which would be and I have one contract. Which would be the state where I will actually pay the tax, or in what is the way I would pay the tax? Here lies the problem so far as a thing which is not tangible in nature. So here comes the problem of destination-based consumption tax. Now, then thereafter, what ideally happens is it also provides a change of giving center the power to tax on the sale of goods and the state to tax on the services. So there is another shift. By that, what ideally happens is your eligibility to credit ideally increases. Because once GST comes in, there would not be a concept of excise, service tax, VAT, CST, entry tax, etc. So there would be a single tax GST. So since there is a single tax GST, so ideally what would happen? So whatever be your input, you would be entitled to the credit of GST. So there would be a system of seamless credit. Now, saying that, what happens under GST is that in India, what we ideally look at is a concept of dual GST. So as Shivani was saying, that on every transaction of goods and on every transaction of services, which is ideally on every supply of goods or on every supply of services, I would have a levy of a dual GST. That is a central goods and service tax and a state goods and service tax. This is if that is an intrastate transaction within the state. If it is interstate, then it becomes an IGST. IGST in simple terms is nothing but a summation of CGST and SGST. So this is how would the GST framework would look like. It subsumes all the taxes as Shivani said, but nonetheless it does not subsume certain certain industrial taxes, like it does not subsume certain cesses, royalties, We are still not in a dark that whether it will subsume KKC or SBC or not, because it has not come up. It has to be expressly clarified. So whether that will subsume KKC or Krishi Kalyan cess or Swachh Bharat cess or not. So then that becomes a cost. So though it subsumes, but there are certain other things which it does not subsume, like any kind of an octroi levied by a municipality. There are certain states when octroi is levied by a municipality. It is not a levy by a commercial tax. So whether that will subsume or not, that is also a question. So these are everything and mostly everything will get subsumed. As I was mentioning, there will be a seamless credit. Only thing is, as Shivani mentioned, there would be SGST can we have this distribution a little later, sir? Please. So there will be an there would not be a cross credit of SGST and CGST, but IGST can be adjusted with everything and vice versa. So CGST, CGST, SGST, SGST, and IGST can be adjusted with anything and vice versa. And they are specified an order: IGST, CGST, SGST. In this order, the credit should come. I have a very simple illustration here. But although Shivani has showed it, but I just thought of giving you a simpler illustration on that. How it happens with stock transfers and everything. Like, let's say I have a state D1 where I have a procurement of interstate procurement of 50 rupees. I have assumed a tax rate of 20%. So since it is interstate procurement, so I pay IGST. So I have a credit of 10 rupees. Similarly, I have a local procurement wherein I have of 50 rupees where I have paid CGST and SGST. So ideally, I have a CGST credit of 5 rupees and SGST credit of 5 rupees. So my total credit pool becomes 20 rupees. Now what happens from D1, I make an interstate stock transfer to D2 at a price of 125. As I said, that under GST there would be a levy of GST for stock transfer because it is levied on supply. So on 125, 20% will be the tax rate, which is IGST. So 20% on 125 becomes 25 rupees. So what is the tax payable in D1 is 25. The order of adjustment is IGST, CGST, SGST. So 10 rupees is IGST, 5 rupees is CGST, 5 rupees in SGST. So my net payable becomes 5. Simultaneously, when in E2, I make a local sale of 140 rupees. 20% be the tax rate, so 10% CGST, 10% SGST. So 14 is my tax payable. How much is my input tax credit? 25, which is the 25 rupees which has come down to me as a stock transfer, which is an IGST. So first adjustment of the entire IGST, as I said, would be against CGST. So 14 gets entirely adjusted, so CGST payable is nil. The balance 11 rupees, 25 minus 14 is 11, gets adjusted against CGST, so my net SGST payable becomes 3 rupees.